Greetings, hi, this is Brad Keller from Bradstreet Proper LLC. We are a property management company based out of Columbus, Georgia. Today we're going to be talking about how to calculate your mortgage. All right, so how do we calculate mortgage and your mortgage payments, okay? What kind of mortgage you would have on a given property and what are those mortgage payments gonna be? And the reason this is important, I've got my calculator here, but the reason this is important is because you need to know if that property is gonna cash flow for you, okay? So today, I am gonna take a little more time on this video. We're not gonna rush through this, so if you're in a rush, this video is gonna be longer, and I'm just gonna kind of take my time and we're gonna work through a property, okay? So, very typical in the Columbus market, we're going to find a property, say it's $80,000, okay? I'm going to find an $80,000 property, okay? And I am today going to use my 10B2 calculator, which this thing is worth its weight in gold. You can get these as an app on your iPhone. But this is a 10B2 calculator, and this is going to help you calculate what your mortgage is going to be. You don't need to use those little calculators on Bankrate.com or Zillow or whatever. You can use a calculator, and this is going to help you play with the numbers, see what different rates look like as far as payments, see if you can adjust things, and this will help you craft deals if you learn how to use this calculator, okay? So I'm very briefly going to teach you how to use this calculator. I'm also going to calculate a mortgage on a given property, okay? So I've got an $80,000 property, and I actually have a deal going right now that's for that price. And so it's an $80,000 property, and I get a lender that says, okay, Brad, I am going to give you a loan at 65% LTV, okay, LTV, and that is loan to value, okay? So they're going to say, I'm going to give you 65% loan to value. Now, we're going to work through this two different ways because I got two lenders interested in this deal. One is 65%, one is 75%, okay? And we're going to talk about the differences here. But first one, okay, I got a 65% LTV. So I'm going to enter in $80,000 into my calculator. You probably can't see that, but that's what I did. And I'm going to times that by 0.65, and that's going to give me my loan amount of $52,000, okay? Now, what I'm going to do is I'm going to take that $52,000 and I'm going to press the PV button, which means present value. So that's how much the loan's going to be for. So I pressed the PV and I entered it as the present value. Now, my interest rate on that loan is 7%, 7%, okay? And the number of payments on that is, well, it's an interest-only loan, so I'm just going to put in one. It's one payment, okay? And I don't know the payment yet because I haven't done the calcs yet, but the future value, meaning the amount the loan will be at the end of the term, is going to be exactly the same as the present value. So that's going to be $52,000. Now, because it's a payoff amount, it's going to be a negative number. So you're going to put that there on the last button, which is future value, okay? And then what you're going to do is you're going to click the payment button, and it's going to tell you you have a payment of $303.33, okay? Now, here's what I do. So I take that $303, and I say, okay, if my payment is $303, what should the monthly rents be for me to get a 30% cash flow, okay? So I need that payment to be around 30%, okay? I'm willing to go up to 40% depending on my expenses, okay? So let's just say shoot in the middle 35%. So this is 35% of what number? So I divide that by 0.35, and it gives me, I need to get a monthly rents of $866.67, so about $900 a month, okay? Very doable on a property that cost you $80,000, okay? So now you know that you're at 35%, and then, if your expenses were also at, say, around the 35% number, that means your total expenses, 70%, you're getting 30% on your rents. So if the rents in this case were $1,000 times 0.3, you're going to be getting $300 a month every single month on that property. And that means that you can pay for a car that has $300 payment, and you don't have to worry about that payment anymore. So that is how you calculate a mortgage. Now, we know what that is. So that payment at 65% was $303. Now, let's say I have another lender that offers me a 75% LTV, loan to value, but this is a fully amortizing loan, meaning this is not interest only. It is termed out at 30 years, and the end amount will be zero. Okay, that means you pay off the entire loan. Okay, so these loans are great if you want to set up a property, have it cash flowing, and you just want to forget about it. Okay, you're not going to refi it, you're not going to do anything, you're just going to let it run. All right, so 360 months is a 30-year loan. Okay, and the interest payment on this is typically going to be lower. So let's say 6%. All right, and this guy's going to offer me 75% LTV. So it's an $80,000 property times 0.75 equals $60,000. So you can see the difference. It went from $52,000 loan to a $60,000 loan. So that means less cash out of your pocket, which if you're tight on cash, then that's going to be important. All right, so we got $60,000 and we got a future value of zero. Okay, what's my payment going to be? $359.73. Okay, so $359.73. So that changed my payment. My payment goes up by, about $50, okay? So that's a big difference. That's cash that's coming out of your pocket, okay? So now I want to calculate how much rents do I need to get to make that payment, say 35% of my rents, okay? So I'm going to divide that by 0.35, and it's going to give me $1,027.80 is how much I need to be collecting in rent each month to be at 35% on my mortgage payments, okay? And so that is only calculating principal and interest, okay? It's not calculating your taxes and insurance, okay? That's part of your expenses that we don't need to consider that here. But I just analyzed two loans. Oh, both of those loans will put us at a nice cash flow. And that's how you would determine, the deal. Now, let's say you had a handful of lenders. You could play with the numbers. Once you know your loan value, you just need to know 4 parameters, okay? Once you have 4 parameters in there, you can play with the variables. So maybe a higher interest rate. You could say maybe a higher LTV. You could say maybe a balloon payment at the end. And you could calculate all those variables using this 10B2 calculator. I strongly encourage you to make this your best friend if you're a real estate investor. You will constantly be calculating mortgages, mortgage rates, and how they're going to affect your deals, okay? All right, thank you so much. If you'd like to contact us or learn more, feel free to click the link below, and we'll talk soon.